Okay guys, so we're still here on 6.23, working through a solution for doing all the journal entries in the ledger and the trial balance. Okay, so the first video I went through the journals, talking about the GST and different bits and pieces, and then went through again trying to jog your memories into how to go about creating a chart of accounts. Okay, so as you all will recall, the next logical step is to go and create our ledger. So I've put our chart of accounts that we've created over here on the left and ready to go and get cracking and creating our ledger. So first things first, business name, Harrison Wholesalers. Okay, and as we've done in the past, okay, let's just go and get cracking and create this shell. So create our shell of our ledger over here using our chart of accounts. Okay, so I won't speak through this, I'll just go through and bang it up. Okay. Alright, so as I've done before, okay, the tip, if you still haven't caught up on it, okay, I'm just holding the control key down, okay, control key, and going and selecting all of these, and control B. Makes everything bold, but only the ones that we want and not the cells in between that we don't want to be bold. Okay, let's get cracking. Okay, so we're going to folio again. Okay, recalling the folio column, both in the journal and in the ledger. Okay, it's a handy reference point for when, if we were to come back and look at our journals and our ledgers at a later point, but it also is good so that we don't get lost while we're posting. Okay, let's go. First journal entry tells us to send $40,000 debit to the cash at bank account. Okay, so $40,000 debit, so we got June the 1st, $40,000 debit to the cash at bank account. So our balance is $40,000 debit. I might just shrink this down. Okay, and our particulars here, because that's on the debit side of the journal entry, particulars are the credit side of the journal entry. So our particulars here, because that money came from Capital J. Harrison. It's the source of the money, so that becomes our journal entry, our narration. Okay, so that's come from the general journal, and this has gone to 301. Okay, let's get through it. Inventories, $5,000 debit to the inventories account, June 1. Okay, $5,000, not 50. $5,000 debit. Okay, and these inventories, this particular transaction, J. Harrison was who contributed those inventories, so narration is Capital J. Harrison. And motor vehicles, $25,000 debit to the motor vehicles account. Okay, and again, our particulars come from the credit side of the journal entry. Folio. Okay, and then $70,000 credit to the capital account. And down here, June 1st. $70,000. Okay. In the past, we might have gone and put in cash at bank inventories and motor vehicles, and we can still do that. Okay. So this is our journal entry sending, which is on the credit side of the journal entry. Our particulars would be what's on the debit side of the transaction, which are these three accounts here. What we're going to do is take a little bit of a shortcut, and we're going to type in sundry accounts. Sundry is a term that we use to refer to miscellaneous or several. Okay, they're sundry accounts. So we're going to general journal, and we are going to folio this as 501. Okay, that's the first journal entry done. Now just a whole bunch still to go. Alright, so let's not waste any time. Let's keep cracking. 3,000 debit to the inventories account. Let's go. On the 3rd, we've gone and bought some inventory, so we're increasing our inventory account. Okay, so equals our existing balance plus the new inventories that we've bought. We now have $8,000 worth of inventories. Our particulars there, we've bought it from Accounts Payable Manufacturers Limited. Wish they had to come up with a shorter name for the supplier and an easier name to type. I always get caught up on this. Manufacturers. Okay, folio that, GJ, and 303. Okay, Accounts Payable Manufacturers Limited. We owe them $3,000, so we come down here. June the 3rd. 3,000 credit is what our journal tells us. So our balance is 3,000 credit. Okay, our particulars is what's on the debit side, so inventories. Folio that. Alright, one thing that we didn't do on our first journal entry, let's just come up here and double check our balances. 73 and 73, we're out of balance by 0, so that's good, we move on. Okay, now we need to reduce our Manufacturers Limited because we sent some stuff back. So, on the 10th, we're reducing or sending 220 debit. So the 10th, 220 debit. Okay, so since our existing balance is 3,000 credit, and we've returned some stuff when we're reducing the balance, okay, we're subtracting that 220. So it equals 3,000 credit minus the 220 debit, but we still owe Manufacturers Limited 2,780. It's still a positive liability. It's still a credit. Okay. Okie dokie. And our particulars what's on the other side of the journal entry here. So that's inventories again. Okay, so our inventories account needs to go down. 220 credit to the inventories account. So we come to our inventories account. Just going to insert a line. The date is the 10th. And the journal tells us 220 credit. Our existing balance was $8,000 debit. So the next transaction is a credit, so we need to take it away. Equals 8,000 minus the 220. But we still have positive assets. Okay, we still have assets sitting at the back, so it's still a debit balance. And our particulars are accounts payable, manufacturers limited. Okay, it's auto-populated, so I'm just going to tab GJ and 303. Okay, up top, balances, all good. Let's move on. We've paid our electricity bill. $150 debit to electricity. So we have June the 14th. 150 to electricity. 150 is our balance. Our particulars, what's on the credit side of that journal entry? We've paid cash, so cash bank. Folio and 202. Okie doke. So GST, first time we've posted anything with GST to the ledger. Okay, but it's no different. Okay, we've set up our ledger. We come down to our GST, our journaling. Our journal entry tells us to post $15 debit to our GST credits received account. So we come down here, June the 14th. Journal entry says $15 debit to this account. So our balance is $15 debit. Okay, this is on the debit side of our transaction, so the particulars come from the credit side. And so therefore our particulars are cash at bank. Folio that, and that's 402.2. Okay, we need to reduce our cash at bank account by the 165. So our journal entry says credit 165. So on the 14th up here, our journal entry says credit 165. Because our starting balance was $40,000 debit, we need to subtract the credit, so it equals 40 minus the 165 credit, but we still have positive cash in the bank, so it's still a debit balance. Particulars here, it can be sundry accounts, but because there's only two, we'll put electricity and GST. And GST credits received. Folio, GJ, and 301. Okay, if you're not keeping up, pause it. That's what you can do with the video. Alrighty, here we've sold some GST free stuff. So we need to increase our bank account, $880. Okay, so our journal tells us $880 debit to the cash at bank account. $880 debit. Our previous balance is a debit, so therefore we add the debit to the debit, equals that plus the new debit. We've increased our bank account. Particulars here, the other side of the journal entry is sales. Folio and folio 301. Now sales, 880 credit to the sales account. Come up to the top to our revenue. It's our first one, so we put the month in. That's the 19th, and it says $880 credit. Debit side of our journal is cash at bank, so that's our particulars. Folio that. 101. Balances at the top. Balance, nothing's out of whack, so we continue on. Okay, so we've sold some stuff, so we need to transfer it out of our inventories account to our cost of goods sold account. Okay, so first line, $500 debit to our cost of goods sold account. So it's June 19, 500 and 500 debit. And our particulars from the credit side of the journal is inventories, folio 201, and therefore now we need to post $500 credit to our inventories account. We come down here, insert a line, that's on the 19th, and it's 500 credit, reducing our inventories. Therefore we take 7780 debit and we subtract the $500 credit, but we still have positive inventory. It's a positive inventory asset, so it's still a debit balance. Particulars is cost of goods sold. Folio that bad boy. 303. Things balance up here. Excellent. We move on. Okay, so our customer has returned some goods, so we need to debit 110 to our sales returns and allowances account. So June 21, not the 32nd. And it's 110 debit is what our journal entry tells us. 110 debit. Our particulars from the credit side of the journal entry is cash at bank. Folio that. Okay, and then we need to post 110 credit to our cash at bank account. I'm going to insert a line in here. Okay, so that date is the 21st. And we are crediting 110, so we subtract it from our balance, our debit balance. So it equals the debit balance minus the credit, but we still have positive cash at bank. And our narration is the other side of the journal, sales returns and allowances. Okay, folio and folio. And we need to reverse our inventories cost of goods sold entry from before, so we're debiting inventories, $70. Insert line, 21st, debit $70, so therefore we're adding it to our existing debit balance, leaving us still with a debit balance. Particulars from the other side of the journal entry is cost of goods sold again, auto populates, hit tab. Okay, folio that, and folio this here. 303, and we need to reduce our cost of goods sold, so $70 credit to cost of goods sold. 21. $70. So we reduce our existing debit balance, so 500 debit minus the $70 credit. But our balance is still positive, so it's still a debit. Particulars, inventories, and folio. Okay, getting there. $1,000 debit to our inventories account. Insert a line. This is on the 22nd. 1,000. Adding it to our inventories, increasing our inventories, so it's an add, debit plus a debit, gives us a debit. And our particulars. Other side of the journal entry, we paid cash. So our particulars are cash at bank. Folio. Okay. GST credits received. Debit $100. So we're on the 22nd. Debit 100. So we're adding it to our existing debit balance, and our particulars from the other side of the journal entry, again, cash at bank. Folio 402.2. No. 402.2. Okay, and then 1100 credit to our cash at bank account. Up here, we're going to insert a line. 22nd is our date, and we're crediting 1100, so we subtract the credit from our debit balance. Still got cash in the bank, still a debit. Okay, so that's inventories and GST credits received. Folio and folio. Okay, everything's still in balance up here. Yes, it is. Next one, accounts receivable, H. Jones, debit $165. June the 28th. And we are debiting 165. Particulars for this one here, sales and GST collected. Okay, so folio and folio 301. Okay, GST collected for the first time, $15 credit to the GST collected account. Come down here, June the 28th. $15 credit, our journal entry tells us. So our balance is 15 credit. And our particulars from the debit side of the journal entry. Our particulars are accounts receivable, H. Jones. Folio. And that is 402.1. And then credit sales 150. Up here sales, putting our date 28th. Our particulars from the debit side of the journal entry is accounts receivable H. Jones. Oh, that's usually my last step, getting ahead of myself here. Crediting $150. Add that credit onto our credit balance so that we have an increased credit balance of 1,030. Folio and folio. The end is in sight, people. Hang in there. Okay, so our second sale journal entry, we need to transfer the cost of goods sold. Okay, so we debit $100 to our cost of goods sold account. Going to insert a line here. 28th. Our particulars here. Oh, hang on, let's just keep going. Let's do it the way that we're supposed to be doing. Equals. Okay, so cost of goods sold, we're adding $100 debit to the existing debit balance, so it's a plus. And our particulars from the other side of the journal entry is inventories. Folio and folio. Decrease our inventories account by $100. Let's come down here, I'm going to insert a line. Putting that date, 28th. $100 credit. So therefore we subtract the credit from the debit. Okay, so 8350 minus 100. We still have positive inventories. Therefore it's a debit. Okay, so our particulars from the other side of the journal entry is cost of goods sold. And we folio. Everything's still in balance up here. Yep. No. been doing everything methodically, but at least I haven't made a typo or anything like that either, so that's good. Okay, so we're paying our accounts payable, so we're sending $1,000 debit to the accounts payable account. I'm going to insert a line, put in our date is the 30th, not there though. Okay, $1,000 debit. So therefore, since our previous balance was a credit, we go and we've paid the accounts payable to reduce it, we take it away. So it equals our existing credit balance minus our debit payment. We still owe the money though, so it's still a positive liability. The other side of the transaction here is cash at bank. We need to decrease our cash at bank by $1,000. So let's come up here. I need to insert a line. I can see the next one has cash at bank too, so I'm going to insert 2. Okay, 30th. Journal entry says $1,000 credit, so we're going to subtract that from our existing debit balance. Particulars, accounts payable, manufacturers, limited, portfolio. Oh, almost there, almost there. It's a pretty big one, this one. Okay, that's that done. Still in balance up here. Awesome. Okay, last one. Wages and salaries. For unused wages and salaries account until now. Okay, so our journal entry says $1,600 debit to the wages account. $1,600 debit. And our particulars are cash at bank. Volume. And folio. Cash bank going down. 30th again. $1,600. Subtract that from our balance. And our particulars are the other side of the journal entry. Wages. Folio. And done and done. Alright. We're in balance up here. Let's go on to the next step. Alright, get our ledger over on the left hand side here, and let's quickly knock out this trial balance. Business name, Harrison Wholesalers. Wholesalers. Trial balance as at the 30th of June. And let's go 101. Sales. 102. I just won't talk. Let's just get this done. Okay, so now that that's created, just need to go and pick up our closing balances for each one and put them into our trial balance. Okay, so we got equals. Okay, sales returns and allowances is a debit. Cost of goods sold is a debit. Electricity is a debit. Wages and salaries is a debit. Okay, inventories is also a debit. Yeah, motor vehicles also a debit. Okay, now we're down to our credits. Okay, so our accounts receivable over here in the credit column equals GST collected, $15. Okay, GST credits received is a debit, so equals 115, and our capital equals 70 grand. I hope this balances. Okay, so let's come down here. We're going to auto sum this here. Going to put double underline underneath it. Give it a dollar sign, make it bold. Okay, and then copy this across here. Bam! There we go, balances. Okay, even though that's about an hour's worth of videos to get that solution done, there you have it. So you can use that as a basis for plenty of exercises as we go forward to help you as a model for doing journal entries with GST in them, creating your chart of accounts, creating your ledger, posting to the ledger, and creating your trial balance. Okay, that'll do from me for now. Over and out.